Yo. Yo, yo, yo. What's up? What's up, dudes? Doing some updates, man. Doing some updates on Amy. All right. What is up, Stankster? Wizard of Oz. What is up, man? Mac and Bees. Cast Gem. Yo. All right. Let's talk about Amy. Let's talk about the point of interest that we are currently entering, currently in. We're gonna go over quite a lot, actually. Quite a lot we're going to go over today. So I just want to start off with one thing, and that is the spots indicator that we track here every time there is a major move. We're coming up to a point of interest, and I'm going to isolate it real quick. So we're going to take away the charts. Here we have an EMA with the spots indicator laid over it. You can see here that when we do cross, we do have a blue spot. And there's no saturation. So, for example, right here, you can see there's a lot of saturation. So you stay away from this because normally there is, it can go both ways when there is saturation. You just want to let it ride. You want very little saturation for it to be a confirmed move to the upside or downside. So this is the daily chart using the spots indicator. You can see here, way back here, we started up in January. We have a cross, a nice rally, and then the blue curve reacts as support. Axis support. And then here, more saturation, but you still have a blue spot on the rally. And then when it crosses back down, pink spot, comes back down, right? And you continue to track this all the way through. You can see right now we have a blue spot, which is good. It's a good sign. And not only do we have a blue spot, but we're trading on this $750 range. We haven't fell down. We haven't crossed up. We're just trading on that range. And that is awesome. We don't quite see that here on AMC. Normally, when we do rally and we stay on an uptrend, there is some kind of a breather, and we haven't seen that here yet, which is good news. So let's talk about everything else here. It has to do with that. Here is the projection that I just posted here on Twitter, and this is what I think is going to happen based on this current POI. So this is the projection. We also have a little forecast here, and it shows you how much percentage-wise what we can expect here. Okay, so from this current level, so this low here on this range is going to be about a 80% move if we do come and we do cross these levels of resistance, and we come all the way up here to what is this parallel channel. Current parallel channel that we're in right now. Okay, so right here, we're still tracking right around this range, and this is a moving average, so you can expect some of the wicks to really come up on the volatility. We can really see, the $15 or $16 range as well with that wick. Remember, back here, the average on AMC plus APE was a 25, but the wick came all the way up to 35. So you do have a pretty large range that this thing can fly before it does come down and breathe here. Okay, on the points of interest, as many of you know that are tracking the cycle, we are entering a point of interest, a very important point of interest. And right now it's looking bullish. It's looking like a positive point of interest here on AMC. So the previous one we had was an inverse point of interest. So the trend right now is every 62 days there is some kind of volatility on AMC. Normally on the inverse POIs, you do have a pump and dump that follows that point of interest. So this one here was a pump and dump, and then you have a period of consolidation, just trade sideways. This was a pump and dump. We traded sideways. And I think this one is going to be a pump and hopefully a continuation here. So I'm gonna talk about a couple of things. On the Discord, We just went over this here, and Professor brought up a good point. Okay, he's also tracking this based on the cycle. So we do have Wyckoff here. Wyckoff comes in clutch. Here's a little. Here we go. Okay, so here's Wyckoff. I'm going to take away my projection here. Why Wyckoff does line up with the cycle here, and it's almost perfect. You can see it here as soon as we got rejected off of this point of interest. So we're gonna pull up two things. We're gonna pull up the cycle. Okay. And cycle has to. Okay, so you're gonna see the cycle way down here. I'm gonna try and like make this fit here. Actually, okay, we're gonna have to go on a different time frame so that I can actually scale this. The thing about this that I'm using right here, guys, is it doesn't. So this is a picture, it's an image, and on TradingView you can't really scale this, so it kind of sucks. So what we're gonna do instead is we're gonna spot these. You guys know where the points of interest are here, are on the green to the blue section, are where we have these points of interest. And actually I have them right here. Okay, cool. Probably even better. Let's take them out for a sec. Okay, here we go. I'll bring them back. We'll talk about this first. I'll bring them back. Okay, so I really like this. Just blows my mind because so now that we entered the spring here, we're headed the right direction. And following the spring, there's two LPSs. So there's this is your first markup right here, and then here's your second one before you get to SOS. So prior to this current setup that we have, you know, we've been hoping that this is a positive POI because the last one we did was inverse POI, and we're just not seeing any signs of a inverse POI right now because we are trading on that 750 range. And normally when you stay and you remain on that range, it means that there's a lot of pressure keeping the price action where it wants to be, right? So you're trapping a lot of bears here. I think what's happening, okay? You can be psyching out some bulls as well. They might be selling here because they're like, well, yo, why are we trading on this range and we're not doing anything? But I think it's all part of the plan. Now that we have this massive spring here, and we're leading up to what is this next point of interest here in December, things are tracking, and they're looking pretty good. So, again, mid-December time is when I would expect this to actually happen. And right here, let's take away AMC's chart again, and we're going to use the same levels here. So I just talked about this parallel channel that we're in. If you use the same parallel channel, you can actually get a very similar setup here. On Wyckoff accumulation. Okay, so what we have is the first run, we have our second run, and then here's our third run. Okay, you see what happens? Now we take away out Wyckoff. All right, let's take away Wyckoff, and now we pull up AMC's chart again. Okay, there it is. Right, 1, 2, 3. Okay, now the level here that we're expecting is around 13, so it's a much quicker move. So one thing that we need to consider is how fast this POI is going to be, because on the points of interest, all we're tracking is volatility. I'm not tracking anything else. All right, volatility is all I'm tracking, and you can see that with the volume on AMC. So here we're entering this point of interest. We haven't seen the same amount of volume here yet, especially we're trading at lower levels, so we should see a break in volume. We should see more volume. On the PFV indicator, you can see this, because this is what the cool thing about this indicator is you can draw a level of resistance, and here we use it, I believe, on the daily chart. So yep. So what this is going to show you, it's price times volume, and it's a filter basically. So it will create what an actual chart should look like based on volume, because anything that is traded on a lower range has higher volume. How does that compare to a different volume at a different price point? And this is exactly what it does. It normalizes that data. So sometimes this is better to read than just looking at the overall charts. And you can see right here on this PFE indicator, on this trend, ever since we entered this parallel channel, we're getting very close and it's narrowing down. Okay, so you have like divergence within itself here on this chart. This is trailing back down. Okay, and then on this indicator here, or not divergence, I'm sorry, you have a downtrend here, and we're waiting for it to pop. This just happened. The same setup here just happened with Sava. So this is one of the reasons why I was bullish on Sava when it did pop and it reached the levels it did. It's one of the points of interest we were tracking, and it did the same thing. Went up, down, down, narrowed down, and then it popped and it rallied. Okay, so this is another indicator to track here with the current setup. We're doing this massive push up here. And this, I update this every time we go on live. I know I talk about a lot of the same things, but they're just updates. You come in here, you're getting some updates on AMC. So we're going to pull up the quad witching, which is a major one here. We got to change the time frame so that TradingView knows what's up. Here we go. All right, so here's a quad witching curve. I'm gonna add a moving average so we can kind of see this a little bit better. Okay. Quad witching curve on AMC starts on the highest point that we can read here from the pre. So we're reading this based on the highest highs on AMC, and from there that's where this trend starts. So this data back here is relevant, but not as relevant since for hedging purposes, quad witching curve, it's a way to understand how the hedge funds here are hedging for those positions, their positions. So a couple of things we're going to look at here. I pull up the quad witching curve, and then we talk about AMC plus APE, because that's how we're able to read these levels of support and resistance. The parallel channel that we talk about here, that we go back into every year, that's relevant here in this case. So first things first, quad witching curve, it's still trending up. AMC is trading sideways here. We don't have the confirmation yet, but it's looking like this is going to continue and go back up. Now this curve here it's a wide range, but all we have to do is close above this level for it to remain bullish. If we do not close above this level, then we're at least close to it here. We need to close above 10. That's why, I said I'm calling for 13. Right? This is the level that we need to close above. By quad witching, let me make sure these dates are still spot on here and we didn't get moved around TradingView. So here, the close price on the quad witching curve was actually down here for this date. So the values before are relevant, but they're not as relevant as the closing price, because we have to look at where these guys got the price down by that quad witching date, these major dates of expiration here on options. So here are the previous levels here on prior to the points of interest before we entered this parallel channel down here. Okay, this guy. These are it, right? We have around 780, 909, and then 9. We're going to round these up to make it easier here. So we're going to do 10, 9, and then right around that 7. I'm going to say 8 just to make it easy for now. Okay, but look at it. Actually, this is pretty interesting looking at it this way. So we hedge for about $1 each time on these quad witching curves. So anything that happens before is them hedging for that position. Remember, all this stuff here is just a money-making opportunity for these guys because they'll pump it and then they get to dump it and then keep all these premiums, and now they just hedged for the next move. So, and you know, this is the why they're doing this is because, well, they're over leveraged on this position, right? So, and that's the belief we have here, the theory that we have here on all these synthetics that are out there. So, if this is the way they're doing it, which is very clear, it has to be cyclical. This is why we follow the cycle and why things happen on a cyclical level. So, again, they're pump, dump, hedge, pump, dump, hedge. Okay, here we have a dump. Okay, we don't have a pump yet. So how are we going to hedge for this price way up here? Even though that's the trajectory, it's changing. But now you kind of have to look at leaps here because these are shorter term hedges, in my opinion. I think once you reach these higher levels, you're hedging for like longer term contracts. So this is where we're going to bring up AMC plus APE. Use AMC plus APE. See, it looks a little different. And let's talk about it. Here's our lovely parallel zone on AMC plus APE. So I'm going to show you guys that are like newer to the channel, I'm going to show you why this is relevant real quick and talk about why this is relevant. So the whole idea here of the parallel zone here is based on the cycle, is that AMC gravitates back into this zone every year. So here we saw it remain on this zone here for 120 days. So that's 4 months. It's 2 cycles. And then you saw a big move, came back down, traded sideways, and then another big move. So these are this was one of the theories that we used here for both of these checks here on these points of interest that we tracked. So you can see it remained on this channel a year prior. So this is February all the way till May, right? And then back here we have the same thing. We fall back in right at the end of February, and we stay in this channel, okay, for 120 days before falling back down, okay? So these are all split into 120 days. That's 1 year apart. And then the year, so every year, guys, all right, every year, bear with me. Do it from here. Right there, 120 days that it's in this parallel channel. And you can see right here, it starts to go back out, comes back in a little bit, and then falls back through. So they're all going to be about 336 bars. We're going to just say 336 bars. We don't want to pay attention too much to the days part because the data back here is going to look a little bit different. Sometimes the charts don't have enough volume, so some of the bars won't be counted in on, you know, very little volume back here. It's going to look different. So let's clone this, bring it back over here. Okay, and right here we have another 120-day cycle here, okay? Now this one is a little different. You can see it comes back into the zone and then falls back out. So just like we did here, guys, January, we're in the zone, and we fall back out in May. So what happens here? January, we fall back in, and we fall back out in May. So you see the correlation? 120 days, 120 days, 120 days. That's every year. So if we continue to follow this cycle that has relevance, we would have another one over here. January and May. Okay, and this is until the cycle breaks. Now we're looking at AMC plus APE's chart here, so it's obviously we're looking at things a little bit different. And AMC plus APE's chart is going to look different because APE is on a downtrend right now. AMC is on an uptrend. So things look, we're getting more information as things happen here, but you can kind of see the hedging. This is a very clear hedging. You're hedging for leaps here. Every single year, what happens in between is not really relevant because these guys are hedging for, well, every time, right? Back here, you're trading at $4. Okay, a year later, you're trading at $10. A year later, you're trading at $20. And then a year later, on this trend here, we're probably going to be trading around 25, 30. So this is not to say that AMC's price is going to come here. Remember that when the cycle breaks, it breaks. This is just, I'm showing you a correlation here. It's very clear correlation. So what can happen here in the short term is we have a rally and we come back into this range here for the short term, right? All I'm basically showing you here and why this is important to track is, remember, hedge funds and these institutions that are over leveraged on the entire market, because AMC is not the only play that these guys are over leveraged in. It's a market thing here. It's the entire market they're over leveraged, and this just happens to be one of the plays where there's a massive community behind it. So you can see why the reason for the potential on this play is because how many people, retail investors, are involved. That's the problem that they have and they're facing. So anything here that turns bullish, if things start climbing back up, you can see after a year, almost 2 years here of just downtrend on AMC, any sort of ripple effect that you get in the market can break the cycle and cause a squeeze. That is what I'm trying to show you here. The fact that we are gravitating back up here into this channel. We break certain levels of resistance, and it's likely it's going to make it a lot easier for us to squeeze here, because these are almost inevitable things that have to happen. There's a clear trend here, and this is a different cycle, by the way. We pull up different cycles on AMC. This is a 4-month cycle, and it's a cycle that follows a parallel trend. Okay. So this is one cycle, and this is, apart from the 62-day cycle where we see clear volatility zones on AMC, this is kind of showing us something a little bit different, but it's still really bullish. Okay, so I think based on this, if we use the little path tool that we have here now, again, this is AMC plus APE's chart, so this would be a lot bigger here. This would probably look something like this, right? So once we're here, this essentially could be a greater push up, could be a massive push up that, takes AMC above. AMC plus APE here would take AMC plus APE possibly above, so a very bullish case scenario, above the $30 range, and then it starts trading sideways here for a little bit. And then here, two things are going to happen. So we enter the zone 120 days from it's a range, remember. Some of these happen a little bit earlier. Some of them happen a little bit later. So the range here can vary. It can be, 3 weeks ahead or 3 weeks behind. Say we enter it here early January. We stay here for 120 days. And then this is, again, going to line up with the next cycle. So we pull up the cycle here. Okay, so we have this point of interest coming up here. We start climbing back up to that range. We trade sideways for a little bit. And then here, this is where we're going to have that test. Because if this is where the cycle breaks on this point of interest right here, then it's game over and we squeeze, right? But if it doesn't break and they somehow manage to trade it sideways around this range to hedge for these levels, then we would prepare to climb back up on this range back here in April, right? So these are, again, just spotting the volatility zones here where something is likely to either rally or get shorted and dump, right? Two ways you can track this. I mean, it's 10 days out of, this 2-month cycle where this actually happens. And the correlation here hasn't changed. It's all of these line up and happen on the POIs here. So this is the other sort of analysis here that I've been looking at here for Amy, and I don't think, this is like a very bullish case scenario that we do cross and we go way above the $35 range. It's not a conservative approach here for AMC plus APE. So that being said, man, here's AMC plus APE now here on this. Let me see what the chat is calling about and asking here. Why can't I see the chat, dude? Oh, here we go. All right. World Cup is live right now. How are you live? I watch the World Cup, man. I do, but we gotta stay relevant here with the stock market. You gotta wait for the final four. I think that's when it gets intense. Unless you're a big fan, man. If you're a big fan, then props. What do we got? We got you gotta go for Spain, baby. You gotta go for Spain. Okay. Yeah, let's talk about Ape. Let's talk about Ape, man. Let's go over Ape and what is going on with Ape. What we know about Ape. So, from the start here, we know why. We know the purpose of Ape. We know why they're using Ape to raise money for AMC. That's been the whole purpose of Ape. So, that I think it's very telling what is happening with Ape. Okay, and I think at some point, Ape, when we do have this POI here, it will very likely still rally with AMC, and it might have a nice rally. It might have a really nice rally with AMC. But I think the play here is not, at least from what we know so far, and just from what I've seen here on the charts and what's been happening with the charts. I'm very convicted and very bullish on AMC. AMC, I think it tells a different story, and I think its purpose is different. Even though they share, they're under one, right? Both together combined, they're under one, but one is going to gain more profits than the other. Think about it this way: it's like on the sector rotation that we talk about, with all these meme stocks going up, having different points of interest. Doge being one that I talked about last week, was expecting a rally, starts to rally up 33%. Still going, like all these things that you can track on these rotations, these other memes. I would kind of treat Ape that way, in that, sure, right now it's on a downtrend. You can compare with AMC. You can see it's just diverting away. It's slowly. Well, look at that. This is the sort of confirmation that I wanted to see, in that would give us more information, because we traded like identical here for a good bit up until November, and then here in November completely straight away. And you can see AMC is now on this bullish trend while Ape is down. So here it's not really about which one is gonna go higher than the other, or if Ape is going to keep going down. Like the whole thing here is, these volatility zones that we track here are very clear, and I think it's important to just focus on on the real deal, and the real deal here is personally is AMC. So I'm not too focused on Ape's doing, and it's currently trading right now at the dollar range. The one thing I did say on this POI, since it is on a downtrend, it's likely that if AMC does decide to rally on this POI, that we might have a nice little gain here on Ape. We might go up 80% as well. That would be nice, maybe even more. But I think just on the overall macro trend, what we've seen happen with Ape at this point, trading at these levels, I think AMC is just overall going to be the winner. We do squeeze and we do cross all of these levels that we're expecting. I think we will see a higher profits on AMC, especially me. I use the option chain as leverage, and it's one of those things that you don't really have with Ape. So Ape is more of a you buy your shares and then you profit off of that. So the leverage part is a little bit different. I think AMC has a lot more leverage and more profits available for. So I think we'll find out very soon, though. We'll find out very soon what's going to happen with Ape here on this trend, AMC's current setup. So definitely see a little bit of sideways trading here. Here's the projection that I just talked about. Here we see this right here. This move is very common in crypto. Happens all the time on crypto. Let's see if I can pull up some examples. Let's pull up Doge. And normally you see it on like the intraday chart here. Doge is looking pretty good. Okay, so let's see if we can find it. Well, we can always flip the charts too. Yeah, this is a good example right here. Right here. So I'm just gonna take this and show you guys what I mean by this. So I just pulled this up as random. Look at that, and it even lines up with everything I'm calling for right here, levels and everything. So this is Doge. It's just a random pattern I found on Doge. I'm focusing on this part down here, and what it is and what Professor had talked about too is that this is a micro accumulation here on Wyckoff terms. But this is it's a theta killer is what it is. You're just waiting for a pop and you're not getting it. And what this does is it creates a lot of fear on both sides, bulls and bears, because people are anticipating a very short-term move here very quickly. It doesn't happen. It gets rejected back down. It just trades sideways. You're constantly just being faked out. So the way these normally do play out is that they are bullish first, and they do pop. Rarely do you see these play out to the downside. Normally, if two things are going to happen here, we trade sideways. This thing actually pops here. It comes down. We trade sideways like that, and then we pop, okay, which is likely. It's also a possible scenario here with the POI. Remember, it's a range. The POI normally does happen on the green portion going into the blue. Sometimes you do see it play out a little bit before and a little bit after. So I'm going to show you here what we can expect just based on the previous two major POIs we had. So this one here started off on the projector a little bit early, came back up, and then right around here is when it started to fall back down. Okay, this one happened a little bit later. So on the projector, happened right here on the green portion, and then it fell on the blue. But the important part here is not when it comes down, it's when it rallies. And both of these have rallied. So this one rallied right here, and then this one rallied right here. So how many days apart? Let's see. Here. Green, 8 days. Rally. So from the peak, right here, or here. Okay, so it's from here actually. Yeah, so about 4 days. 4 days that we had the POI, so major volume is what we're looking at here. It took about 4 days for it to delayed here. So if we actually followed this trend, you can kind of see that it's delayed a little bit each time. Why I'm calling for the peak here in December, you can see here based on this projection where it lies is right around that range. So here on the last two major POIs we had, there was a peak right here, and there was a peak, where's this one? Right here. No. This one's down here, I'm sorry. This one's down here, and this one is down here. And then here on where we would expect a major volume here, on Doge, you can see it would happen right around the middle. So right around this range here, December 13th. But the range can go all the way up till December 16th. So even if there was a fake out, why I'm going to give this a little bit of time, but if there was a fake out here, or say it does cross up and then it falls back down, it can still happen right here. And it's just a one-day event where it just starts climbing back up. So, but yeah, this is one of the patterns I just wanted to sort of talk about here, because I see this, man, when I'm scalping crypto, this thing happens all the time. I can literally, you can pull something up, man, pull something up and give it to me, and I will find this pattern. I will find it in like a minute, because dude, I'm telling you, man, it happens on every time frame, the way up to these pushes back up. I saw it happen on Litecoin yesterday. Also saw it on Link. Let's see where it is on Link. And you're going to find it on both the bearish and bullish side. Here it is on Link again. You can see this one. This one is a little bit more clear in the way it goes up. It just sort of, it doesn't necessarily have, and the point of interest would be right here. That's where the big volume is. You can see it's a pretty big candle up to the upside. And then you can also technically track this one, but this one is not going to look as pretty. I think the other one has a little bit more to it. So I'm going to do both anyways to show you. So here's the first, and the first one here you can see actually happens a lot quicker. Why I don't like it that much. I don't like this one that much because of it's like quick and then it comes back down. So the one that I would track instead would be this one down here. From the bottom, right here. And then that's where the POI lies. But remember, crypto, I'm just showing you the structure of this pattern. Don't want to pay attention to this or anything. The Doge one was a lot more accurate in how I normally see them. But it's basically a cup. You're seeing a cup, a rejection, a little handle, and then a continuation back up. So here, I think that's exactly what we would be expecting. It would be a hovering cup. And then you know how it goes with Amy, dude. She doesn't like handles. So she just rallies after that. Cup, no handle, boom. All right, I'm going to answer some questions now. We have a couple of you here asking some questions. All right, Matt, how do I go about positioning myself? Be holding calls with markup triple digits. December, January. So, I mean, and this is never, never, ever, ever financial advice, but I will just show you basically maybe a scenario here on how this works. So, options are very, very tricky because you're always trying to time the absolute bottom. What I've learned on AMC is that AMC is hard. Is hard with options. Like it's there you can do the whole option game, and with a lot of other stocks and indices, SPY being one of the ones that I think is the most profitable. In really specializing in a very few select stocks is the way to go, I think, unless there is a point of interest on a on a stock or something, and you plan for that. But specializing on option trading is very important. I think why the majority of the plays I have are just SPY plays. So, but with longer term contracts, it gets a little bit tricky with AMC because of these volatility crushes that we have, and then the theta as well. Sometimes even like a short term period here can affect some longer term contracts following a volatility push up. So here we did have a short term POI, and this one was also projected by the cycle. It was the same theory that we used here for May 12th. You can see that here on the volume. It was the same crypto dump. We had FTX going down. Luna was going down back here on the 12th. So this was clearly part of the agenda, part of the cycle. And, following this volatility push, a lot of the leaps and contracts that are further out got a little bit more expensive. But see, as it starts coming down, the volatility starts drying up, those take a hit. And even if they're further out, they still take a hit because AMC just works that way. So it's a little bit tricky with these contracts trying to get the bottom. But what I will say is it's really about patience for AMC. I think for AMC contracts, it's really about patience because you can have some contracts go from pennies to dollars in days, and I think prior to those moves, you normally see a downtrend on these contracts. So you can say we take this period here and compare the option chain. If you compare the option chain with some of these charts, they're going to look very different. The shorter term contracts are going to look like this. The longer term contracts are probably going to look fairly similar to AMC's price. Because here you're fighting theta. Theta is a time killer. So here you have one contract. Here you have your other contracts. Midterm contracts right here. And then your longer term contracts that look basically the same as AMC, right? So you have three. These are higher risk, higher reward, mid risk, and very little risk if you're still bullish, right? This is just trailing to the upside here. So I think the way I normally look at it here, if you have the longer term contracts, which are still very profitable with any volatility, and they're still cheap, when these do come down, buy them right here. It sucks a little bit because you're taking a hit on these contracts, but as soon as you get this pop, say the price is climbing back up, these skyrocket and they actually go way higher than AMC's price. You're going to see it if you're looking at them on a scale chart, you want to normalize the data, they're going to look the same. But these contracts normally take a massive pump on the volatility. So this is just one way to treat contracts. It's really just a patience game, waiting for some of these volatility zones to happen. Dog over here is like going ham. And it's why I believe some of these shorter term contracts on AMC can be a little bit tricky to time and then also expect. So I think longer term contracts are always going to be safer and really just not as, again, from experience, man. just not as down man on these hits it takes with volatility and theta, which is huge. So I think, with that, and then I always talk about this on the Discord as well, having a little bit of a game plan here moving forward. When I see that opportunity here on AMC, I'll be mentioning that and talking about it and sort of having a little game plan on what I'm going to be doing. But we are close, and I do see this happening very soon. So we're trailing up. We're doing good. Looking good is important. For sure, for sure. Wizard of Oz. So Doge moves more in December. Let's look at Doge. So Doge had 2 fake outs already. Doge was insane, man. Insane kind of a play that we had here last week. So Doge was predicted by the cycle, which was great. Take some of these alerts out so I can show you. All right, so Doge, if you guys are not in on the loop, on the weekend, I actually went on Twitter and I decided I would play the whole alert thing on Twitter for once, because I'd never done that. I do this on the Discord, but I don't do it on Twitter. So I'll pull up some of these tweets, but this was picked up by the cycle, by the way. This is points of interest, just like we track on AMC and GameStop. These, you can track them on the entire market. And you can see here, point of interest found. I'm 25x long. And then you can see here, shortly after, 3-4 hours later, rally. Right? So that's the first one. Second one was a 50x here. And you can see on both of these, I'm personally the type of person that uses cross margin, because I think isolated margin is just, you're going to be liquidated basically. It's very easy to be liquidated on isolated margin. So high risk with that. So cross margin is my thing. So here you can see we had a small dump, but there was still a POI that I was tracking, and then a massive rally. Both times here, very, very close by. A lot of people here were looking for a dump. And the POI here that was tracking was a push up all the way up to 10 cents. And that's what we got here. This was a 33% move on Doge. And you can see right now it's still climbing back up. So yes, there's a lot of opportunity on Doge, and I am calling for a in the long term here, a nice push. But I think this is the start of it. I think it's priming up to do something here, along with the rest of the crypto stocks. And I will say this: there's a lot I'm tracking right now. I'm going to pull up one chart here that I think is very relevant as well, and show you a little bit of why this. So a new tool that's basically I'm adding on to this whole cycle tracker thing is a pattern scanner, and this thing is crazy, dude. One of the stocks that I just tracked using this, and this is just using cycle analysis, pattern analysis, which is very different. And as a whole, or I'm sorry, not DY, it's JST. This one, dude, this one blew my mind how accurate this was. It's crazy, and it's still freaking playing out, dude. Okay, so I found this a week ago, right here. Okay, right here. Now, check this out. You probably think right now that this pattern is from this crypto. This is a stock, dude. This pattern right here was found with the pattern scanner. Okay? Look at how freaking accurate. All you got to do is take this, dude, from this point on. The moving average. Make it a different color. Look at how accurate this is on the levels. You would think, I'm telling you, bro, you would think that this pattern is from this crypto, JST, just. And it's not. And it's been tracking to a T, man. I've been using this actually to sort of give me a better perspective here on what the crypto market is going to do. Because this does trend and follow very closely what the crypto market is doing. Right here, you can see that it's calling for a downtrend here potentially soon. And the crypto market, I'm also calling for a downtrend. I'm calling for a short-term downtrend. You're going to see some other cryptos rally prior to it. I'm currently looking at Ethereum Classic to rally. Over the weekend, man, on crypto plays, had probably one of the best weeks here. It was a three-day. The last 3 days on crypto have had Doge 800% on one play, 400% on another. I had Ape 300% play, and yeah, a couple of other ones that were very close to that range. So all because of cycle analysis in the end, and it's very underrated. Cycle analysis is not something that is really known here for the, like, short-term POIs and longer-term points of interest. Sometimes those things, man, can be very, very profitable here. So yeah, it's something I deal with here a lot on the website. But to your question, man, Doge is looking very nice where it's currently at. One thing I will say where it is right now, this right here, to me looks like a projector pattern. It's a hovering projector pattern right now. And one of the levels that we have to make sure that we respect is going to be this 9.7. So 0.97. If it does cross below this, it's very likely that we're going to see a downtrend here. Now that we just pulled up that JST chart, like I said, it's been following, basically the crypto market is following that right now. And since it is calling for downside, it's very likely that Doge will also take a breather back down. And I think we will essentially hit, and this is, it doesn't have to apply to Doge specifically, but if it was a bearish case here, we would see potentially the 89-cent range before having any kind of a bounce. The shorts here are pretty long, so it's normally with crypto you get a period of, like, a long period of short and then a long period of long. There's like no in between. It's crazy, especially when you're trading on these high volatility ranges. So here, a big push up will be followed by a big push down, and that's a short opportunity right there. So I see us actually coming all the way down to 89 and then essentially climbing back up. I think that's going to be our little breather here in our little test. And this is if Doge decides to come down with the crypto market. If it doesn't, then we can, expect a bigger rally. But I think right now it's definitely due for a breather. Now that we did hit the range that we talked about, right? I made you 200% on the first call. Look at that, man. Look at that. I know some people went pretty hard with, there were some people that were like doing 100x. And I'm like, yeah, when volatility is high when volatility is high, I'm kind of skeptical on that and if you're even on cross margin, I think 100x is like very dangerous. But some of them, can be very profitable, especially with how accurate cycle analysis is. Spotting some of these points of interest very quickly, you can make so much money, man. It's ridiculous. So much return on your investment. So yeah, that's the beauty of cycle analysis. And you know what? I said this the other day, but we would not have this if it wasn't for AMC. AMC opened that up. And that's the reason why it's like she's a god, man. Really, it's the opportunities and all these findings have came from the analysis of AMC. And I think that's just awesome. I think it's awesome. And continuing to do this really with the entire market, it's about opening up the when AMC does take a breather and comes down, looking at other plays is perfectly fine, and that's what I focus on the Discord as well, is like providing that and teaching that, because it's staying on one play is obviously, I know most of you know that that's just not sustainable, and that's not the way to treat the market. The smart thing to do is use a resource and leverage that with the entire market. So using the findings here and the everything we've done with cycle analysis, and using that to leverage the analysis, right, on other positions and finding other positions. The sector rotation is a big one here. Now that a Doge came back down here, starting to rally back up, you can see here that on this downtrend that we're probably going to see here very soon, the next couple of days. Okay, say it does something like this, it comes back down. This is all leverage, guys. It's leverage in the end for market, over leverage positions in the market, and it's just they dump it, they pump other stocks, they pump it, they dump other stocks, vice versa, all the way through the entire market. So following this dump is when I would expect AMC and GameStop to actually start climbing back up and rally. I think this is going to be one of those tests. I did say already that Ethereum Classic seems to be tracking a little bit behind on this next point of interest, and I actually see, like for a major push-up, I see AMC going first, and then Ethereum Classic going right after. I've already seen this with a lot of other stocks that have similar trackings. I said Doge is one of the ones that normally suggests that GameStop will have a rally next. It has a little bit more correlation with GameStop. So I do see that here. LRC is also another one, man, that looks really good right now. LRC loop ring is, I'm tracking a point of interest right now for that, and it's looking like it's going to climb very soon and could have a really nice rally on LRC. Let's look at it, actually. On the daily chart here, LRC. So following this pump and dump, and why am I on this one? Well, we can go on, I use Bing X, but you got to go on the full chart here. This is LRC, man. LRC is looking pretty crazy here on this downtrend, but normally the way we see this, actually, there's a lot of correlation with GameStop on LRC. So any sort of pump and dump you get here will be correlated with GameStop, highly correlated with GameStop. So GME. Okay. You can see right here. Look at the correlation. It's like, it's clear, dude. It's clear the correlation between the two. AMC or GameStop goes first. See how you're starting to see that separation a little bit? Here, GameStop goes first, and then LRC goes after, and it's about 2 days. You can see that back here as well. The separation did start to happen, though, right around this range. And then back here, we can go way back here. You see how LRC went first? LRC goes first, and then GameStop goes. So I'm telling you, man, I think this sector rotation is actually flipping, and this was expected way back when we did the whole Ethereum Classic correlation with AMC. Ethereum Classic was going first, just like the entire crypto market, but I think now it's flipping, and now the meme stocks are going first, and then we're going to see a crypto rally, and that's just on the big pushes to the upside. The smaller pushes up, we're starting to see a lot of cryptos go up right now, a lot of altcoins going up, which is also an indication that volatility is coming in the markets. And we're going to see that right now here with a lot of data that's coming in. We have so much data coming in. It's going to decide here what the market's going to do. The SPY. But yeah, guys, remember, if you do want more information on this and some of those plays, you can always join the Discord. Click the link below, and it'll take you straight there. I am running a promo right now. It's 50% off for the holidays, so if you guys want to join, remember, all you got to do is click that link below. Here is the SPY. Okay, major level of resistance right now is what we're looking to cross here. I'm still bullish on the SPY. I think this is a short-term breather, and by the looks of it, right now you can see there's a bit of resistance. This wasn't a clear push down. I'm going to show you something else here that I think is extremely relevant as to why I don't think we're going to push back down and keep going to the next leg down. I think we're going to do something like this and then cross back up. The reason for this is we're at a secondary level of resistance. Take away spots and volume. Okay. Here, secondary level of resistance, massive pushback down. Secondary level of resistance, massive pushback down. Secondary level of resistance, massive pushback down. Okay. How quickly did these happen? This is a daily chart. So almost immediately as you hit that level, you crash back down. Here, we hit it, but we're consolidating. Okay, very quick, and this one hasn't even came up to touch the macro level of resistance. So I think what this is going to do, and this is looking at it more from like a psychological level, and we are coming up to a major level of resistance. So I think a lot of people here are just waiting for us to hit this to go short. Because they're like, yo, it's the third test or the fourth test. We're gonna come down, and yeah, even though that's on the table and it's a possibility, I feel that with the current market conditions and Bitcoin, crypto's already coming to a bottom. It's about to spring. Meme stocks ready to just turn around and rally. To me, this looks like the market is ready to turn around. Unless we have a rug pull here in the next 2 days. This would be invalid in my opinion. And I think consolidation here, there's a lot of saturation, means that this is ready for the next leg up. And then here, you might see a day or two of more consolidation before it busts and breaks through. I keep saying this, but I'm still calling for the 420 range by the end of the year. That's something that I called way back here on this rally that we had here, 420. And then possibly even 430 we can see by the end of the year. And I think that after we reach those levels up here, then yes, we'll get a small, not a small, but like probably a pretty drastic pullback here. But even this pullback here, I don't think is what's going to take us down to the next point here. I think once we reach and cross this level of resistance, we'll start climbing back up. And that's still the projection I have. I still, the copycat indicator has done a great job projecting this. From the bottom here, the copycat the copycat indicator projected just that. It was a pushback up here to this level. I can rewind and show you. I believe if we go like down here or something, it might just project that here for us. And the time frame that I use is very specific. I use the 3 hour or the 6 hour, I'm sorry. A lot of them are going to give you different things. But that's the whole point, is that the copycat indicator is supposed to give you a better perspective on what you can expect here in the market. So, on this replay here, the beauty of it is that you can project this right after. So you draw your little trend line on the projection. We hide copycat, and then we press play. Right? So up to this point here, you can see that copy pat was correct, and it was a nice little projection right now, but we're still climbing up. Once you you press play, and you have a continuation here on the indicator. So there's a lot of ways you can look at it. Again, the indicator is just meant to provide a different projection each time. You can see right here it's calling for upside. And I like this. I like that it's calling for upside. I use both of these. I use copy pat and I use spots. Spots also gives me a better picture here. And again, they're all going to show you a different setup. This one is showing us a bearish one, but it also shows you a point of interest, which is major volume. And whether it's, it's pointing down, but this can clearly just keep pushing back up, which is what we're expecting. So yeah, we'll leave it at that. We'll leave it at that, man. Yeah, if you guys want more updates and stuff like that, I provide all that on the Discord. But yeah, this is what I got for you guys, man. I just wanted to show you guys the updates here on AMC on the cycle, and just keep updating you guys because we're coming very close to the December point of interest. We're very close to it, and I think we're primed and we're ready to push back up, and that's all that matters. Alrighty. Awesome. We'll leave it there today. Thank you for coming in here, man. Remember, subscribe and like this video and share it with your friends and family. Follow me on Twitter. Join the Discord. All right, it's free. Click the link below. And I will see you guys very soon, man, because we about to rally. Alrighty. Bye-bye, guys.